All right, good afternoon, everyone. Welcome to Turnkey Insider. Before we get started, I just want to do a quick mic check, make sure you guys can hear the sound of my voice. Please type a 1 in the questions box if you can. All right, excellent. Thank you, guys. Thank you. Glad to see some new names in here and some old ones. So today, I got a couple questions from a turnkey member, Mr. Ralph H. So I did get your questions. So we'll kind of be going over these for a bit. And of course, if you guys have any other questions, feel free to throw those out there in the questions box, and we'll get to them as we can. Whoops. And just give me one more second here. All right, thank you guys for your patience. And if anyone's new, my name is Greg. I do handle all the training here. All right, so let's go ahead and dive right in. All right, so Ralph did send some screenshots with his questions. The first one refers to December 5th, I believe. And let me go ahead and pop my trade marker on so we can follow along with what he sent in. All right, so all right. So the first question is, what is the criteria for distinguishing the bracket trade from the bounce trade when they look very similar on the chart? So the main difference is, and I can see where in instances like this where that would be a little tough. The main difference is that the bracket trade requires our turnkey trader bracket section here to match the overall direction of the trend as well. So if we're entering along, we need the bracket to be green. If that's the case, that actually lends strength to the trend. So we don't need to see the yellow line come all the way down to where we normally like to see it for the bounces, you know, somewhere in between the 0 and 60s. Although it can bounce off any really one of these lines, they can all act as a support or resistance. So a bracket can almost be seen kind of like a continuation of the previous trend where we don't have enough of a reversal in between. So we're not going to see our yellow line dip too far down, but we have our green bracket, which just adds strength to the trend. So there will be a few edge cases where, you know, we won't know till the bar closes due to the way the bracket updates, in which case we can attempt a retracement. And the main difference from that with the bounce is that they usually reverse a little bit longer. These ones aren't too long, which causes the bracket to stay red for longer, which is fine because for the bounce, we don't care about the bracket. So it's more important that our yellow line comes from an extreme and gets down to in this good zone here, between the 0 and 25 or 25 and 60. I like them bouncing off the 25, and depending on, how far the trend, like this kind of trend, bouncing off the 60 would be good as well. So that's the major difference. They are very similar trades, but in a case where, in the case of a bracket where, we may be coming off a long trend, so this yellow line is very bloated or to the most extreme it can get, and then if we have a little short reversal of 4 or 5 bars, which we see in this case, once we get that green bracket again, that adds strength and basically lets me know that, I don't have to see this yellow line dip below or dip too far down to kind of bounce off these different lines here. All right, we do have a couple a few more questions from Ralph. Let's see. And this was on the same day in the YM. So I hope, excellent. Hope that clears that up for you. I know it's probably a little bit confusing since they are so similar and it's a very subtle difference, but it is important. And, overall the bounces are a far more common trade when compared to the bracket. So it's not something we have to worry about too much. We're going to 12.5. So just give me a second. Let me hop back here to 12.5, and I see the area that he's talking about. All right, so Ralph was also asking about a specific losing trade, which we do get those from time to time. They are fairly infrequent. And he asked about this bracket here. As it only went 4 ticks from our entry before fully reversing. 1, 2, 3, 4. Yeah. Before fully reversing. So, of course, we do get some losing trades. Typically, what I've seen on the NQ, I haven't really statted the YM heavily, but NQ can be 3, 4 a month. Sometimes the last couple months, EMD has only had 1. So, is there a way to disqualify this trade? And in hindsight, there is. And it may be something to consider in the future, as this is something, I mentioned it a couple times, and this is a perfect example of how it can keep us out, and that is the zipper, right? Or just what we consider chop in here. When we get multiple turn bars, I see we're below the 200, so it's not really wrapping around the 200 like we normally see. So that one is a bit tough, and I honestly don't know. It's hard for me to say in hindsight if there would be a way to disqualify it. The thing that would probably worry me is, no. I honestly just can't say that I would have avoided that one, really. I mean, it looks fairly decent. The yellow line did poke above the 0, but that, I honestly just think it's a qualified losing trade. Back-to-back turn bars in here is a little worrisome. Anytime I see that, it's kind of it can be worrisome. Sometimes there's just head fakes. So this one, I don't. Yeah, I don't want to. I don't like to be misleading when looking at historical um, stuff and say, oh yeah, I could have avoided this one because I don't know that I could have. So, but I'm of the opinion just taking all the qualified trades. We do take some losers, but uh, usually over the course of the month, um, those are far, far less than uh, the amount of winners we get. So yeah, and sometimes there's just head fakes. I mean, when I first started this and was really excited and started live, and there were two back-to-back beautiful bounce setups there, what I always consider just textbook bounce setups, and they're both head fakes, and it was just one of those days, and and uh, they got me. So it was not a great day, you know. And Ralph mentions, okay, knowing that is actually an encouragement as I assess my own skills and anticipating what is coming. Yeah, and sometimes it's a bit harder. Usually with the brackets, um, you don't really see them like this, even though it does qualify. Um, but these back-to-back turn bars is kind of worrisome. Um, Maybe for the future, something to keep an eye on. Could probably help us avoid some riskier trades. And certainly when these start wrapping around, if I see two that wrap around like this when they're over the 200, that's definitely a red flag for me. Just sit out for a minute. If a trade pops up in the near future in that situation, and it happens to be a winner, that's okay with me because I've just seen that happen too many times where it's too risky. All right, and let's go to the next question. This was all right. So now this was on the next day on 12/6. It was not that trend. Yeah, it looks like your data was probably a little bit different from mine, which is odd. Is that the right? No, I'm looking at the wrong time. Sorry about that, folks. Give me 1 second as I try to match these up. Hmm. Yeah, it's weird. I don't have maybe my data is a bit different. I'm not sure. It does happen sometimes. Ralph was asking about this one. As it is a trend trade, normally I like to see it come from the extremes. Um, but the question is regarding the pullback. He says, I missed this setup as I didn't think the pullback, 27 ticks, was large enough to qualify. What should I have been paying attention to in advance in order to catch this? So uh, one of the basic things I look with any of these trades is they all have to cross the orange trigger line at some point. So once the value of that bar, once the low of that bar is below where the turnkey EMA or the orange line is, that's the trigger, right? That is usually the last thing I need to see to qualify that trade. If it doesn't reach there, then it's not qualified. So given that all other rules are qualified, of course. I say that all trades need to see that. And so we can see the bounces, since they're these kind of reversal type trades after the market reverses and then the market has to reverse again, they have to cross the orange line because the bar has to go all the way to the other DPI. So the bounce and the bracket and the counter trend all qualify on these bars that cross to the other DPI. So they have to cross the orange line. And along with the trend, as that's one of the rules, is that it has to cross the orange line as well. So once the pullback crosses that orange line, if all your other rules were already qualified, you can go ahead and put in your order at that the appropriate DPI price. And I think this will kind of tie in to this last question. So, oh well, there was more to this one. Give me a second. No. All right, so I think this is mainly just asking about the different colors of the bars. So oh, and Ralph mentions, first time I've understood that price has to cross the orange line. I don't see that in the rules, or at least missed it. Now I understand trigger line. Yeah, I think we refer to it as the orange trigger line in the rules. I'll make sure when I get a chance to see if I can tighten those rules up for you if it's causing confusion. So also for anyone else, if you guys are having similar, issues, or if things aren't that clear to you, certainly send an email to support and say, this isn't exactly clear. There may be a better way to explain it. So, I mean, not everyone always understands everything in the same way. So, all right. And then we have a couple questions about the bar colors. So, for things like trend trades, the bar color needs to be the appropriate color of the direction we're heading. So green for long, red for short. And that's why everything is kind of color coded. So the bars are green, the background's green, the bracket's green, the direction ribbon is green, all signaling that we're trending long, right? When the bars are this gray, or I often hear people call them blue, or whatever color it shows up on your screen, everyone's contrast is a bit different. These are simply telling us that my orange line is not in order with the 200 EMA for the direction the bars are heading. So notice that my bars are started to trend long here, but my orange line is below the 200, and we need to see this above the 200 to clue us in that we're starting to build a long trend, right? So if those are out of order, we'll get the gray bars here. So, and we'll never have a qualified trade on the gray bar. We may have the gold tail or wick, whatever you refer to, but if the body of the bar is gray, we shouldn't be able to have a qualified trade, as we normally need to see the background green, and that's also tied into the order of these as well as the direction ribbon being on the correct side. So as far as the gold bar, it's basically a modified volume indicator. So we like to know that there's a lot of momentum building on a bar, and once we get to our appropriate limit that we like, that tells us that there's enough action going on here that we can assume there's a lot of momentum. So, and as we saw, on some of the losing trades, even though they're fully qualified, sometimes there's just major fake outs. So remember, there's some big institutional traders that can sometimes have more intricate plans than we realize. So, but that's the name of the game. Most of the time we look for familiar patterns that can kind of clue us in what those moves may be, so we can hop in, and sometimes we get faked out. So, but the good thing about using this bar type is that we avoid a lot of those, because you got to think, in some of these bars, when there's a huge retracement, there are probably quite a number of traders using, whatever system they're using, they're probably shorting the market at this point. And then when the market goes back up, uh, they're out of luck. So these are, this is all chop and head fakes in here. So we avoid a lot of those by being more patient and waiting for the larger moves. So I hope that cleared up some of that for you, Ralph. So I'll try to, I do have to cut out early today, but what about the gray bars in the turnkey ribbon? Yeah, that's not as important. So let me try to zoom in here on my ribbon. Um, so what I really look for the gray bars, how these bars work is basically it'll plot green if it's increasing in value, and it'll plot gray if it stays the same, right? So that kind of tells us things are leveling out. But here, oops, wrong one. So here we have it leveled out. We see that basically almost every other bar, it's going, couple green, gray, couple green, gray bar. And that's fine. That happens when we start heading into the extremes. So once we pass the 100 is when you'll usually see that most often. Unless the market's kind of sideways or flat, then that'll happen before it gets to this point. If the previous bar is green, so in the example of if we're looking to enter this trend here, if the previous couple bars are green, as long as I don't have like 3 or 4 gray bars in the middle, I'm not super concerned. But once I get past the 100, and certainly 115 is when I kind of pump my brakes because I just don't like going to too far of extremes. And then once we see just more gray, we're likely past the extremes anyhow. And that just kind of tells us that that the market's basically oversold or too bloated. And certainly we're going to see strong trends when that happens, but we don't want to try to enter a trade at that point. We'd want to get in at a point like this where we're not there yet, in case, the market does take off, and then we're already in when it's too risky, to hop in because, even this one pretty late. Yellow line and ribbon is at extremes, and this has just kind of been flat and really bloated. So this one, even though it would have hit profit target, it's pretty risky at this point. We don't want to hop in at the end of the trend. We want to try to hop in at the beginning. So that's, another thing I do is I'll limit myself to one trend per run. I just think that's probably the safest bet. All right, so I hope that answers those questions for everyone. Let's see if there are any good trades here. Decent bounce, couldn't really catch a runner there. Unfortunately, a couple back-to-back trends, which I don't mind this. And that's the good thing about using the wider stop is we'll ride over these first 3 because we're not going to hit our profit target until, bar 6 after our entry. So could, but this was toward the end of the day anyhow. So pretty decent bounce there. Looks like we had a head fake there. Looks like there were a couple head fakes this week, which is unfortunate. I've had that happen. Sometimes when the NQ moves is super busy, I'm sure you guys have noticed it's been moving really fast lately. Been a lot of movement. So looking back at this one, the only thing I can see is that it didn't come from an extreme. And while it necessarily doesn't have to, I like watching them come from an extreme. And the overall trend wasn't exactly It's pretty decent. So not sure if there was a way to avoid that one, honestly. But soon after that, we did have a nice bounce short. Um, might have been a decent runner. I'm not sure if it gets stopped out at break even before there. Typically, I don't find that to be an issue with these bars. The market tends to move really fast. Uh, let's see, once we filled. Yeah. Oh, Robert's asking about the money management strategy when using the 20 ticks as the second target. Um, if we're now using a runner, um, I think now it's a bit better, at least in like the NQ, um, to go for the runner. It's one of those things you just have to kind of gauge what the market's doing. In the last couple months, August and September, where it was a lot slower, uh, much more of a kind of grueling marathon with these days where it was really slow and cycling, not really cycling well or giving us the trends. Uh, then I think it was definitely better to go for the 20 tick target instead of just trail at a runner. Um, but there have been a lot longer moves lately. Um, with I think a lot of the economic news that's come out has caused some really large moves. So uh, I like going, either one I think is great. Um, I like going for the 20 ticks, and honestly, I just kind of wing it sometimes and maybe switch between them. Um, but either method is acceptable. I think the 20 tick over time is probably a little more consistent um, because the market often does tend to move 20 ticks instead of get to, yeah, and I'm sure you've noticed you probably hit that 20 ticks more often than you would see a run that goes uh, far enough to trail by 20 ticks. So that's why, and it's an extra $100. And then what I like to do actually is once you get to the point where you have 4 contracts, is I'll take 2 off at the profit target. One will be my 20 tick target, and the last one will be the runner. And that's really, to me, the most, I would say, lucrative strategy with 4 contracts. As you definitely get, or not definitely, but that 20 tick happens more often. And then in case the run takes off, you still have a contract uh, in the game to collect more of a profit. So, that extra contract, it does hurt a little bit more on those stops, but, if you're at the point where your account can absorb that, it is a very good strategy. So, all right, that was before market hours. Looks like that. May have hit profit target. So let me actually bring up the EMD. I don't know if anyone trades the EMD or if you guys like it. Um, I often do here. All right, Robert P does. He likes the EMD. I always often hear people complain about the low volume. Um, but really with Turnkey Trader, the thing is, once in a while you're going to have your stop or your profit target jumped over, not your entry, just because the bid-ask spread is a little wider because the volume's thin. So, uh, prices do get skipped over. So once in a while you just don't get into the trade you want to get into. Um, but I think it's totally fine for that to happen. So that looks like this happened in every market. That's crazy. So probably be one of the only losses in the EMD this month. I think the last couple months I've statted the EMD, it's only been one, maybe two losses last month. But $10 per tick market, so the losses do hurt a little more. Certainly don't jump in there if you're not comfortable with that risk. Um, but if you are, or if you get to that point, um, the EMD is a good market. So thin volume, but once you get the hang of it, it's really just a market you have to be more active in. So you have to, it's not, if you're using an ATM, it's really not a market where I would just put an order in and then just, not pay attention to what it does. Where, on the NQ, you can kind of do that, just kind of watch it out of the corner of your eye because it's likely if it reaches your price, you'll get filled. But you still do rarely get jumped over in the NQ. So especially when it's been moving fast, and there have been a couple moves, unfortunately. And yeah, Susanna mentions that did these roll over? Yeah, today is rollover day, so if you haven't rolled over your contracts, today would be a good day to do it. Um, which it's always kind of, rollover week is always kind of one of those weeks because a lot of people stay on the old contract, so a lot of volume stays over there. And, a lot of times people don't even roll over till midweek because the contract expiration is, I think, the following week. Um, and the contract expiration, it's not really something we worry about because we day trade and we're always out. We recommend flattening at 4 or just not entering any trades past 4 p.m. That way we're out plenty of time before the market closes and they're settling all the contracts. We don't have to worry about anything like that. You don't want a contract getting stuck in there because the market can still move beyond that, or right when the evening session opens up, you don't know what the market's going to do. So having an open order when they're settling is not, unless you're a swing trader, which we don't do with these systems, not something we recommend for. Yeah, and Robert mentions bad day today with volume split on the contracts. Yeah, which it always happens with rollover. So, some people like to stay on the old contracts. There's usually more volume. It just, it's one of those things. It's part of it. We just kind of got to absorb it and roll with the punches. If you want to stay on the old contract until like Monday or Tuesday because the volume's higher, that's not a big deal. As long as we roll over before the contract expiration, we're fine. So, Ralph asks, do you know if anyone has traded currency futures like 6E with the turnkey system? I did look at 6E for a while. I actually really like the FDAX, or maybe you might like the mini DAX. It's a little lower margins. I know the FDAX is like 1250 a tick, so it has some fairly high margins there. But I like both of those. We'll just go ahead and take a look at the 6E. It's been a minute since I've actually looked at it, so. Oh, there we go. And we'll see if this is how I remember. Whoops, let me go over here. Just give me 1 second, guys. All right, so this is our 6E. It's generally open from, I want to say like 3:30 a.m. Eastern to what would that be, about 1:30 p.m. Eastern, maybe no, like 11:30 Eastern. So um, yeah, it's been a while since I've looked at it. The thing with the markets like these um, is when I was watching them, it was actually when our markets weren't doing that great. Um, they tend to move pretty slow. At least the 6E does from my experience. And, it does move pretty consistently in one direction typically. I don't know why they're moving like this. Maybe if that's the euro, I'm not sure if the Brexit would have anything to do with that. Um, it could, but from my experience, the 6E it just really moves too slow um, to really present a lot of trades. It might be one of those markets where you pop it up on the side and just kind of, if none of the other markets are doing anything, just kind of check it out. Um, you might catch a couple extra trades a week on it. But from my experience when I was watching it, it moved really, really slow. And it didn't really seem to be worth my while to trade these. But if you are interested in a market during that same time frame, I would take a look at the FDAX or the mini DAX. Those move a lot more, and they do present quite a few trade setups. So let me see if I don't think I have I do. So here's the FDAX. Um, it's one of those markets you really have to pay attention to it. I would, you know, I like to limit myself, so I don't try to take every single trade. Um, just like strong trends, watch coming from the extremes, things like that. Bounces seem to do really well in the FDAX. Trends too, and it's fairly low volume like the EMD, but that's not always a bad thing because what usually happens is that once it starts moving in a direction, everyone kind of hops on and then just pushes it in that direction. So um, the one thing I would like a word of warning with the FDAX is, um, it is 1250 a tick. So, you have to be prepared to absorb that. Losses are going to happen. There are a lot of trades on the FDAX, so you do want to watch out for being wrapped around the 200, stuff like that. I would just, stick to the rules, take only the most highly qualified bounces. There's plenty of trades. It's not worth it to risk stuff like that. So it's one of those markets you really have to study, I think, and learn. Yeah, the mini DAX is, I believe, $5 a tick. So I just don't have a feed for that one. So, but like with any market, you really want to study it, especially if it's new, and take a look, or before you really start trading it. Um, so it certainly does have a lot of moves, but there can be a lot of fake outs. So. Volume on the mini DAX, I'm not sure honestly. I haven't looked at the mini DAX. I don't. Uh, I'm pretty sure I don't have a feed for that one. Um, so I would imagine it's actually probably higher than the DAX because it's lower margins and it's $5 per tick, but it does follow the DAX really well, or the full FDAX. The wrap around the 200. Robert wants to take a look at that. Let me see if I could find a good example. So this is what I like to avoid. I call this the zipper. Um, when we have our full bars, turn bars, just back to back, coming up around the 200 like this, like a zipper. Sometimes there's more space in between them. But once that starts happening, it's, you just got to sit out until there's a stronger trend. That's pretty much what chop looks like in with these charts. So I'm not sure. I haven't really seen another great example of it in recent. Yeah, unfortunately not. I didn't really see any good examples. Uh, Let me just do a quick scan here and see if no, because the markets have been trending a bit better lately. Something like this would be a pretty good example. Just this action here, and then come back up over the 200. Almost like the teeth of a zipper. Um, that's just really worrisome. And generally, when that happens, also you'll see the yellow line kind of hover around here in this 0.25 range, which if it hasn't come from an extreme previous to that, I'm not really super interested in that. That just that's just tells me that the market's kind of sideways. Like this thing overall is fairly sideways, and we can see that illustrated in these bars. Just back and forth, back and forth. So it's a bit of a longer term chop. So this is akin to if you were looking at a shorter or smaller bar size, you'd probably see a decent, or these like 8-bar cycles or something like that, maybe 8 to 10 bar cycles and then reverse, something like that. And whereas within a single turn bar, we could probably see, you would actually see a lot of chop if there was back and forth movement in these bars. So these bars don't do well when the market is behaving like this, but it does keep us out of some trades. So, and that's what this uh, turnkey is really good at, is, making us be patient and just kind of sticking to the rules. It's very slow and steady wins the race. It's really hard to overtrade. I think if you're taking more than 2 or 3 trades in a given market per day, that's probably too many, as I usually see like 2 to 3 good trades when the market's really moving. Oh, John mentions the set on your charts have better color than mine. How can I get your settings? It could actually be just the different contrast, because it's kind of my contrast transmitted through the webinar onto yours. So I use the same default settings that would appear in any of your charts. If you want to adjust the colors a bit better, you can just come into the indicators menu. You have different colors. That's kind of odd, because they should all come stock green, red. The only ones I really hear are different are like the gray and the blue tails. I hear people mention those often look different. But you can actually come into the indicators and change some of the colors. That's really the best way I would suggest to customize these for yourself. And if you ever make any changes you don't like and can't figure out how to change it back, you don't have the choices I have. Yeah, I'm not sure. You go ahead and send an email to support@turnkeytrader.com, and I'll have to maybe set up a time with you to do a screen share, because that sounds very odd, because this should be, you might also just need to update the software. Um, so, because I haven't adjusted any of these settings online, so I'm not sure what the issue could be without looking at it. Yeah, go ahead and send one to support and add a screenshot just so I can see and maybe I can just answer it for you right there. If not, I'll set up a time to do a screen share for you. So, all right. So we're about down to the end. I got about 5 minutes left. I do have to duck out a little early today, take care of some personal business. So if there's any last minute questions, feel free to holler those out. When was the last turnkey software update? Um, I mean, I don't think there are any major updates within the last 2 months, I want to say, for Turnkey. Um, yeah, not that I can think of. Or maybe I missed one. I'm not sure. So I usually update, I just run an update once a month. Just go to the website, rerun the installer. It's really quick. It doesn't affect any of the templates. Open a fresh template and see if there's any major changes. Christopher D asking if we have a chat room. No, not for Turnkey Trader. I know we plan to have been talking about um, opening like a trading room slash chat room type thing. So just haven't got there yet. We'll probably be after, sometime in the next year or after the New Year's. We usually take the time around in the Christmas holiday to kind of wrap up any loose ends and get prepared for the new year while the markets are kind of slow. So even though, first 2 weeks, 3 weeks in December still aren't bad. So anything new coming? Not that I can think of off the top of my head. Um, no, not really. I am going to try to be updating the counter trade rules here and see if I can add another trade to our list of trades for Turnkey. Just want to do a little bit more testing on it. So it's been decent, but I don't want to throw anything out there if I'm not sure that it's a quality trade. So we'll be trying to do that periodically. But I usually find that the bounce is certainly my favorite trade, and I usually find that one to be enough, uh, you know, for what I like to do each day. So. All right, let's see. Did I miss any questions here? So I'd like to thank Ralph for sending in those questions. I hope we cleared all that stuff up for you. Um, sounds like we got some things to click for you, which I'm glad. Hopefully other people benefited from that as well. If you guys, if anything pops up uh, later this afternoon or over the weekend, feel free to shoot an email to support@turnkeytrader.com. We'll try to get back to you as soon as possible. Or, if you have any suggestions, things you've noticed that could be improved, anything like that, we're always looking for feedback. We want to tune everything and make it as effective for you guys as possible. So, all right, and with that, I must sign off now. So I hope everyone has a wonderful rest of your Friday. I hope everyone has a great weekend as we head into the Christmas season, getting prepared for the holidays. And until next week, happy trading.